And then welcome to Moneycontrol. Hi, this is Nikki. JSW Steel has reported below consensus performance for the September quarter. The company has reported a net loss of more than 900 crore, perhaps due to one-off items. But to know more about the company's financial outlook, guidance on the Capex and the volume, we've been joined by the Joint Managing Director of the company, Mr. Seshagiri Rao. Mr. Rao, Diwali greetings to you from all of us here at Moneycontrol. I'm going to start off by asking you about the quarter and the net losses that we're seeing right now, and the sharp dip that we've also seen even on the operational front.
Thank you, and I wish you and your family very happy Diwali, and also to all your viewers. Then, as far as this quarterly performance is concerned, it is the story of volumes. We have done very good volumes overall. It has shown a growth of 30% quarter on quarter. What is also very interesting is our domestic sales have crossed 5 million tons first time, and the growth in the domestic sales volume is 47%. So, in spite of the exports, volumes have fallen by 37% quarter on quarter, 62% year on year. We could sell more quantities in the domestic market, which shows the domestic market is reasonably good. Second important point here is we not only sold whatever we have produced, we have also reduced our inventory by 4,33,000 tons in this quarter. So lesser inventories, higher domestic volumes, lower export sales, and we are very close to our guidance which we have given in the beginning of the year of achieving 25 million ton production and 24 million ton sales for the entire financial year.
All right, I just wanted to understand about the one-off items that we're looking at for this quarter, which also has contributed to the net loss. And also, can we expect the same amount of a one-off probably that we've seen in this quarter, perhaps even prevailing in the next quarter to come by?
These one-off items are majorly arising due to three reasons. One reason is inventory losses. When we bought the inventory at a very high cost and when the prices have fallen. So in the last quarter, we had to consume those inventories on the raw material side, and part of the finished goods inventory we had to sell. So there are losses relating to that, approximately 1100 crores. The second item, which is there is the foreign exchange losses. So on the revenue account, we do 100% hedging. So there is no problem as far as the profit and loss translation losses are concerned. Whereas the capital account, that is loans which we have taken in foreign currency, we cover only on a rolling basis next 12 months liabilities. Anything balance is there, we have to translate at the revised exchange rate. So the losses pertaining to that is approximately 350 crores of rupees. So those losses have come in. The third element is export duty, which is also, in my view, is one-off item. And it is temporary measure taken by the government. So it is approximately another 60 crores of rupees. So these are the three items which were one-off items in the last quarter, which is forming part of the operating EBITDA.
Mr. Rao, you said the third component is also relating to export duty. Could you explain more of that in detail? Because we've also seen significant hit coming in even in your export volumes. And the last few conversations that we've been having, you suggested that you expect a rollback to come through. It was expected by September. Clearly, we're sitting in October right now. When do you see that happening? And what sort of one-time loss again are we looking at even in Q3 if these exports duties want to be rolled back?
If you see the purpose for which the export duty has been imposed is to contain inflation, whereas the WPI inflation in the month of September is around 10.5%. So it has already come down from peak of 15%. Out of that, steel contains 3.22% in the overall weight. So in that, if I look at the September month, the steel prices in the mint, particularly flat steel products, they have fallen by 14%. It is negative 14% in the month of September for flat steel. So the purpose for which the export duty is imposed to contain inflation, particularly on the steel front, I think that is achieved if you see the steel mint numbers. Maybe with some lag, it will get reflected in the WPI. The WPI numbers are still showing, as far as steel is concerned, there is a 4.5% positive inflation in steel prices in the month of September, which is not really so if you look at the steel mint numbers. So based on that, we expect the government of India will take a positive decision on removing the export duty on export of steel.
All right. So when do you could you please repeat and let me know when do you expect the export duty now to be rolled back?
So it is anybody's guess. What we can say is we can give the facts and figures, what is happening on the ground with regard to inflation and the steel price increases globally, what is happening, and the demand supply scenario. Uh, then I think government of India will have to take a call. I'm sure that it is a temporary measure. So in due course of time, they will take a call on this.
All right. And you said the quantum that can be again repeated in Q3 on account of this one-off would be to what extent?
If it continues, it could be, yes. Because as I have been mentioning, because duty is there, we cannot make exports zero. Even in the last quarter, we have exported 5,60,000 tons of steel from India, from JSW Steel. So it is sizable quantities even when there is an export duty. So these customers, it is not possible to just switch off because export duty is imposed. If we have to get back these customers, it is not possible so easily. That is why our exports have fallen from around 30% of our sales to 10% in the last quarter. So we are there in the export markets. We continue to do the exports. If export duty is there, one of item will be there even in the Q3. Yes.
Mr. Rao, now that you've already seen significant downtick coming in on your export volumes, and at the same time, no sign of duty reversal coming through from the government until now, would you still want to stick to your guidance when it comes to both sales and production numbers, or you'd want to rethink and recalibrate on that number?
As I mentioned to you, as far as domestic demand is concerned, if I see the first 6 months of the year, domestic demand has grown by 11% in India. So the consumption of 106 million ton in the last financial year, this year it is expected to be 112 to 115 million tons. So there is an incremental demand which is there in India. So part of the quantities is possible to be absorbed in the domestic market. But at the same time, if I look at our capacity utilization in the last quarter was 86%, whereas our expansion project at Dolvi was operating around 80% capacity utilization. So if there is no export duty, the export volumes could have been better than what we have done in the last quarter. We could have improved our capacity utilization further. But at the same time, whatever guidance we have given of 25 million ton and 24 million ton, even assuming there is a fall in the exports volumes relative to last year, we feel that we will be able to achieve that guidance by increasing our domestic market share.
And what utilizations do you expect in second half of the financial year as compared to the first half? And also, could you guide us on your cost pressures?
Bhushan Power and Steel has completed their expansion from 2.75 to 3.5 million ton. Now that is fully operational. So that 7 lakh ton means 3 lakh ton extra production that can come from the Bhushan Power and Steel. Number two is I mentioned to you that the capacity utilization is only 80% at Dolvi for the expansion project. So we will be able to improve the capacity utilization further. Similarly, at Vijayanagar, last quarter we suffered lack of iron ore. So now iron ore availability we are trying to bring from Orissa to Karnataka if it is not sufficiently available in Karnataka. With that, we wanted to increase the capacity utilization at Vijayanagar. So with that, there could be more production. Over and above that, we wanted to reduce our inventories by another 4 lakh tons in the second half. We already reduced 4 lakh ton when you compare to 30th June in the Q2. Now we will reduce another 4 lakh tons. So whatever we are producing, there is more production which we do in the second half that we will sell fully. Over and above that, we also reduce another 4 lakh tons of inventories further down. So therefore, our sales volumes will be better or more than the production volumes in the second half. That is why we are guiding that we will be able to achieve our sales and production volumes in this year.
All right, Mr. Rao, also, let's talk about your operating EBITDA, which has come to 1,752 crore in this quarter. Could you guide me on your consolidated EBITDA per ton number, and what is the figure that we can now expect going forward in the next few quarters, or the next quarter, given the kind of cost pressures that the company is being witnessing right now?
EBITDA per ton we don't guide, but I can tell you about the cost side. In the last quarter, the weighted average cost of coking coal that was consumed, C&F basis was $381 per ton, which was lower by $40 when you compare with the Q1 of this financial year. Whereas what we are seeing today, because lower cost of coal has come in, which we bought in the Q2, in the Q3, the coking coal cost will come down by $80 per ton. So that is one reduction which will happen. Similarly, iron ore prices in the last quarter have fallen. That has fallen in phases. It has not fallen at a time. So that reduction in the entire quarter will get reflected in the Q3. There is also power cost reduction which will also happen in the Q3. So therefore, there is a lower power cost and there is a lower iron ore cost. There will be a lower coking coal cost. Those benefits will come in this quarter, plus additional volumes. That is how we are seeing as the second half is concerned. So we are not guiding about EBITDA per ton, but this will be better than Q2.
So we are looking at a margin improvement coming in Q3 and Q4 on account of receiving cost pressures, like you said, be it in terms of coking coal, be it in terms of iron ore, and also your power cost for that matter, right?
Correct, absolutely right.
I would also want to chat about your net debt level right now. Because the last conversation that we were having, you said the company has been guiding a debt to EBIT of around 2.7 times. What is the situation right now, and how much do you expect to end the financial year? At what number are you targeting and end this financial year?
If you see 30th June versus 30th September, we brought it down our debt by 1500 crores in the last quarter. Whereas if I look at the exchange rate fluctuation, which impacted the overall translation of foreign currency liabilities, the debt has gone up on account of that by 2,500 crores. That means the debt could have been lower in this quarter by 4,000 crores if foreign exchange fluctuation is not there. So 2,500 crores if we attribute to the foreign exchange fluctuation, the overall increase in debt is actually 5,000 crores over 31st March 22 after incurring 6,800 crores of Capex in this financial year after paying a dividend of 4,000 crores. So therefore the debt increase is only 5,000 crores net without exchange rate fluctuation. So our effort is in the second half because of the reasons which I just explained to you. We wanted to reduce this debt and bring it down to the levels which was there as on 31st March 22 plus exchange rate fluctuation impact.
Mr. Rao, I didn't catch what number are you looking at to end the year with the net debt level, please?
We had 57,000 crore debt as on 31st March 22.
And how about
as on 30th September, it is 65,700.
And how much do you expect it to, stand at in the next 2 quarters, by the end of the next 2 quarters?
As I mentioned to you, our effort is to reduce by around 5,000 crores. That is what we are working on.
All right. And we stay course on that guidance as we've suggested earlier, right?
Correct.
All right. Also, a word on the Capex, because any changes with that? The company so far has spent around 6,593 crore. You've already trimmed your guidance the last quarter that we spoke. It now stands around 15,000 crore. So, where are we headed with that? And are you looking to revisit the Capex numbers as well?
No, 15,000 crores we already guided the last quarter. So we already incurred close to 6,800 crores. So balance expenditure will be incurred in the second half of this financial year. So we will be sticking to that 15,000 crores of Capex in this financial year.
All right. So sticking to your Capex, sticking to your volume guidance, looking for better margin improvement coming in on your performance. Also, let's talk about your overseas subsidiaries in that case. How has the performance been so far, and what are you expecting out of those subsidiaries?
As far as USA is concerned, steel prices got corrected. Demand is a bit weaker. and at the same time in the Europe, both demand and prices, both of them got corrected. So global situation is not that much encouraging as on date, whereas high inflation and interest rates are going up in both the economies. So the situation may continue for some more time. But as far as our operations are concerned in the USA, in the plate and pipe mill, that is Baytown facility, we had a positive EBITDA of $25 million. Unfortunately, in the case of Ohio, the HR coil prices have fallen, and at the same time, there was huge inventory losses we had to take in the last quarter. So the total operating loss in Ohio was 40 million. Out of that, a significant portion is towards inventory losses. So because of this $40 million loss in Ohio, in spite of making $25 million positive EBITDA in Baytown, net from US there is a negative of 15 million operating loss. Whereas in Europe we have a positive EBITDA of 1 billion euro in the last quarter. So it is a small amount. I think it will be at that level in this half year also.
Also, I would want to chat about the guidance for your Ohio unit right now because that has been, on recurring basis having some losses, though there was some break-even in between. With this, are we done with the high cost inventory overall for that unit, or are we expecting some more pay to come through for the Ohio unit?
It depends upon how the prices will move. Whatever raw materials are there today, they have been marked to market as on 30th September. So we're assuming that there won't be any further correction downwards. If prices fall further, then there could be inventory losses. We can't rule out that, but we don't expect the prices to fall further. We feel it is already bottomed out.
And overall for the sector right now, for Indian steel sector, what do you think are the prices like? How do you expect the next 12 months perhaps to be for the entire steel industry and how different it is from the last 12 months? Could you just give a relative guidance out there?
Now, if you see the global situation when the demand a bit weak, we are seeing a big adjustment in the supply side. There is a rapid correction in the supply side. So we have seen in the first 8 months of this calendar year, there is a 68 million tons of lower production. Out of 68 million ton, 42 million ton is from China, 26 million ton is from the rest of the world. So there is a supply side adjustments are also happening quite quickly, adjusting to the fall in the demand. So this situation may continue in the global markets because of the two factors which I just explained. High inflation, very tight monetary conditions, financial conditions. These two together, global growth is getting slashed, and we don't expect steel demand a big revival in the short term globally. But in this context, if you look at, there are two areas where there is a higher production and demand is very strong. That is India and also Middle East. In India, if I look at the first 6 months of this financial year, the consumption has grown by close to 11.5%. So therefore, Indian steel consumption is strong. There are government expenditure, auto sector, and also residential construction, and various other sectors are doing quite well. Therefore, domestic demand in this financial year is expected to be 112 to 115 million ton, which is higher by 6 to 9 million ton compared to previous financial year. So I think the domestic demand will be able to absorb the capacities that are there in India today. But if export markets are opened, even though it is weak today, I think there is opportunity for Indian companies to leverage that position.
Any plans for further capacity expansions? Because Tata Steel has been consolidating their capacities clearly. So, how would you look at that? Are you also looking at some process where you want to, further go ahead and probably acquire or probably stop the expansion of the rapid expansion, given that the situation is still, a little dicey when it comes to the export markets? A word on that, and also, if you could give a small Diwali message to shareholders, given that the company has already posted a loss for this quarter, suggesting how the next 12 months will be looking, how bright would the next 12 months be as compared to the previous 12 months?
So India's story is undoubtedly very bright. Why I am saying is India is at the beginning of building its infrastructure. It is the beginning of building its renewable power. it requires a huge amount of steel. So 2030 itself, we require 300 million tons of steel capacity, as against 154 million ton. Therefore, every company, steel company, either incumbent or new players, has a huge opportunity to expand to meet the growing domestic demand. I have no doubt in my mind in that. So we continue to expand, we continue to scan opportunities. There could be temporary setbacks of this, which we have seen in the last quarter. Huge volatility, which brought in a very high raw material cost and falling steel prices. But it is inherent in the steel sector, which is cyclical in nature. We are used to that. We have seen so many cycles. But India's story is concerned, I think it is quite intact.
And any plans when it comes to your inorganic expansion? A word on that, because it's been an environment where most of the steel makers are weighing down on their options when it comes to the capex, when it comes to the demand, probably even consolidating. What's your standpoint on that?
No, when we say today we are a 27 million ton steel company, 35% of this capacity is through inorganic growth. So inorganic growth is part of our strategy. So we continue to scan the opportunities as and when it comes. And whatever disinvestment program we are hearing from the government, those units are sizable. So therefore, we will seriously look into that and then take a call at the relevant time.
All right, Mr. Rao, we'll leave it at that. Thank you so much for taking out the time and speaking to Moneycontrol as always.
Thank you. Happy Diwali.
Happy Diwali.